It's important also to consider that bitcoins are mined, or in other words, discovered, by using powerful computers or graphic cards to solve complex mathematical problems. This process uses a lot of energy and it's not very good for the environment. The network of computers that constitutes the backbone of the blockchain also has to be very fast to process all the transactions that happen worldwide every day, and this poses a difficult challenge because the number of people using it is growing every year. It is estimated that the last Bitcoin will be mined in the year 2140 because the creator of Bitcoin implemented a periodic increase in the complexity and difficulty of the mining process, which makes it harder and costlier to discover these coins as you approach that magic 21 million number. Another very interesting fact about Bitcoin is that the experts think that since the beginning, about 4 to 6 million of the total amount of Bitcoins were lost, due in part to people erasing their hard drives or throwing away their computers when upgrading without acknowledging the value of Bitcoins they were going to lose forever. There are stories in the internet about people that sent their computers to the garbage and later realized that Bitcoin stored in them would make them millionaires. Talk about regret of throwing away your old PC. So, after this background of Bitcoin history that we just explored, now we should start thinking if we want to invest in it. And when should we buy it to try to maximize our return from the money invested? Before even considering which broker to use to buy Bitcoin, you must think about your risk tolerance because this is an asset with enormous volatility. And how much of your hard earned money you should deploy in such a risky instrument. This is an individual choice, but one that should be very carefully assessed because of the inherent risks and emotions associated with this type of investments. My advice is that, should you decide to invest in Bitcoin, consider using just a small part of the money in your portfolio and don't go all in just in one time because you probably won't buy at the exactly the best moment, and instead if you buy in small amounts in different moments in time you might be able to achieve a lower average price. And we always want to buy cheap and sell high to make the best profit possible. So now comes the time to decide when it's the best moment to buy Bitcoin. If we analyze Bitcoin from a fundamental perspective, it's very hard to decide when it is cheap enough to buy, because nobody really knows the intrinsic value of each Bitcoin. As all types of money, its value is based solely in the trust investors and the general public have in it. If for some reason people should lose trust in Bitcoin or a better revolutionary digital currency would appear, Bitcoin could lose most of its current appeal. If we search the internet and consult what the experts are saying, we see that everyone has different opinions on the future value of Bitcoin that range from like 50,000, 100,000, or even 1 million US dollars. But these are only opinions, and we should not base our investment decision only in news headlines or projections that, despite being very appealing, don't have fundamental backing behind them. We must control our emotions and our FOMO, which is the fear of missing out this great rally, and try to make our buying decision based in something more tangible and more objective. This leaves us with technical analysis as the tool that can help us decide a good point of entry in the cryptocurrencies. One great and free tool we can use is the web page of investing, which has some great charts and technical analysis instruments for almost every asset you can imagine. We can start by opening the Bitcoin USD chart and check the evolution of Bitcoin in the last few years. And at first glance, we can acknowledge that the Bitcoin is an extremely volatile asset. And if we scroll through the chart, we can see that Bitcoin in 2017 went to the maximum of almost 20,000, and then it crashed to about 3,500. And if we want to understand when it would be a good time to buy Bitcoin, it's better to change to 1 month graphic. In this graphic, each bar corresponds to 1 month, and then with some easy and simple technical indicators, we can see that in 2017, when it got to the maximum, we have some late and a little bit sooner indicators that it could be a good time to sell when this blue line crosses the red one. Then here in 2019 it would be a good time to enter again. And now we have to wait because it's a dangerous time if we want to buy it in 2021. It's very dangerous to buy it in the top, and there is a real possibility that Bitcoin might correct a lot before it goes up again. And now we can talk a bit about Ethereum and why this is an important player in the crypto world. Ethereum is number 2 cryptocurrency in terms of capitalization, and some people think it is a better long-term investment because it has smart contracts attached to its ledger and has the potential to be an improved version of Bitcoin, which was the first and original cryptocurrency. It is speculated that people holding at least 32 Ethereums could, in the future, by staking it, create a passive income of roughly 6 to 12% per year and might be available to all in Ethereum version 2.0. It is also noteworthy to point out that Ethereum, unlike Bitcoin, doesn't have a limited total amount of units. So, in theory, there is an unlimited amount of Ethereum that can be created in the future.
Here we go again. Trying hard, but you wanna be my friend.